Let's start with the vehicle sales, Jeff, coming in 21% higher year on year for June. A number of economists will say, but hang on a minute, there's a base effect to take into account. How positive is this number in your opinion?
I think, Bronwyn, very positive indeed. If you consider that the early projections at the beginning of the year were around about 9%, I think 12 was the highest we heard. Everyone has since then revised, and every month all speculation is defied by the result, particularly with June, because May was a very strong month and we expected June to be down given anticipated possible disruption of the World Cup, but also the fact that those fleet rental companies had already upfleeted and made those vehicle purchases. So kind of surprising, delighted of course that it's up 4.5% on May. But passenger cars year to date up 48%.
And there's a huge surge in passenger vehicles. What's behind that surge? As you were saying, artificially we were expecting that boost from the World Cup, and that should have subsided.
I think it's a combination of factors. First of all, interest rates are 5.5% lower now than what they were this time last year. People have deferred those purchases, they've now had to make them. There has been stability in car prices, and I think possibly due to the World Cup and other criteria, there is a significant enhancement in confidence levels, consumer and business-wise. But of course, what we are seeing is that whilst the bank lending criteria and lending ratio has gone up, it's not to the same extent. So we have to therefore conclude that these purchases are not being made by private buyers financing these cars. To some extent, yes, but predominantly not so.
So, Patrick, the question is, how are people financing their purchases of vehicles in this environment if we're not seeing that private sector credit extension line moving dramatically?
And one of the things we've done as a business is to look at retail investments into retail products like unit trusts, and those have come off. And we kind of suspect that a lot of that spend has actually gone into financing some of the durables like car sales, for example. So it's kind of hard to make that conclusion, but I think just intuitively, one would think that there is an element of cash purchasing taking place. Also, bearing in mind that the market has come back quite nicely, so people are feeling a bit wealthier. And also, house prices have come back quite nicely, so there may be some element of equity withdrawals from mortgages.
New vehicle sales outpacing used vehicle sales, or at least that ratio is starting to look a little better.
It's looking
than it has.
a lot better, certainly, Bronwyn. In fact, used cars have been quite buoyant for some while now, almost 2 years, as the gap between the price of new and used widened. And in fact, there's quite a significant shortage of good used stock right now. But however, we are anticipating a sell-off of some of the fleet rental vehicles post-World Cup.
So a glut of used vehicles will come back onto the market.
And indeed, but needed because there's a shortage. So I think it's good from the consumer's perspective. The supply will improve, but I think we can expect to see quite a buoyant used car sector going forward as well.
In terms of the double-dip recession scenario that may unfold, and we've had a host of negative economic data out this week, what impact would that have on vehicle sales in South Africa?
Well, I think there are many imponderables, and certainly one of the things we have to come to terms with is the reality that this recovery rate cannot be sustained. So I think it's going to, whilst the recovery will continue, it's going to diminish somewhat, maybe ending the year maybe between 15 and 18% down. But you're right, there are so many imponderables both locally and internationally which could impact on local sales, but also of course on our export levels.